Hello Mavericks, this is Emery and welcome to today's Market Roundup. It is Wednesday, February 21st. So there's a lot to talk about today. NVIDIA's earnings just came out as I hit the record button, so we'll be talking about that a little bit as well. But we'll be recapping the trading day today, taking a look at any meaningful news, examining the broader equity markets, doing some commodity analysis. We'll then be doing some technical analysis on the major indices, taking a look at the market internals, including the sector heat map, and then wrapping things up by looking at a few potential trading opportunities. Okay, let's get right into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So starting things off with some market analysis. All right, so the equity markets were down pretty hard for most of the day. It looked like we might have a 3-day losing skid here, and we do have that in the Qs. But the Dow, the S&P rallied hard enough in the last few minutes before the close to eke out a marginal gain. And the Qs rallied hard as well. You know, small caps down almost 0.5%, oil up over 1%, gold slightly down. So in terms of news today, like I said, equities rallied hard into the close, and we also got the Fed minutes, which showed us that Fed officials are wary of cutting rates too soon. Now, I mentioned at the start of the recap that we're going to discuss NVIDIA a little bit, and the chip maker gave a sales forecast that has fallen short of the most bullish estimates. NVIDIA, as we all know, got its start making graphic cards for video gamers, and over the last couple of years, the stock has really, just skyrocketed into the mainstream investorverse. Because of the hype behind AI and how its products are going to help fuel, aggressive research and development projects in that space. And we've seen blowout earnings report after blowout earnings report, which has played a central role in the stock rallying as hard as it has. This particular earnings report is likely a little bit disappointing to those that are ultra bullish. It's definitely not a blowout earnings report. NVIDIA is going to see some more competition for sure, from businesses such as AMD, and AMD is going to be very stiff competition indeed. And then there's also some new export rules for chips headed to China, which is overall net the largest market for semiconductors. It'll be very interesting to see what the aftermath is going to be like and what the trading day will bring tomorrow. NVIDIA has kind of become the de facto bellwether stock for the entire market. It'll be very fascinating to see how the market digests this earnings report, and then we'll see what the futures overnight trading has to bring. So tomorrow's market roundup is going to be very interesting indeed. But you can see here by the AD line that most issues were actually declining today, and majority of issues are also below their 50-period moving average. Now, as we take a look at this chart of the S&P 500, I was ready to change our +3 rating to a +2, but we did in fact close above that 20-period moving average, so no changes there. It'll be fascinating to see what happens tomorrow, however. And if I look at the Qs, we are actually below that 20-period moving average for the second day in a row now, for a long time since I suppose the earlier stages of January. We got to see what happens, but I feel like this is a pivotal turning point for the market, kind of a make or break moment from the perspective of whether this melt up still has legs underneath it or not. So taking a look at the sector heat map, it's fascinating because, when you see an advanced decline line with the majority of issues declining, this is not the sector heat map you would expect to see, but it is the one that we have. So it is very, very interesting how we do have a lot of green. And now some of these are in sectors that have been beaten up of late. So energy, for example, coming back, utilities coming back, comm services still holding strong, financials mixed bag. But yeah, it's a very interesting heat map in light of the advanced decline line. And it does show how a lot of this melt up has been concentrated, highly concentrated in a select couple of sectors and in a select number of names as well, big names. But like I said, nothing really changes as far as the outlook goes in terms of the S&P. In terms of the Qs, however, we are, like I said, below that 20-period moving average. But, things do have to shift a little bit more in order for this melt-up's ratings to change a little bit. All right, so now we're going to take a look at some potential trades. I've got one in the energy sector, which is really, really interesting. So we've got Exxon. Energy's been beaten up, and I was talking to a few traders earlier this week and last week, where I was saying, I'm getting interested in energy, but I need to see a very, very clear bullish breakout here in order to justify taking risk. And we might have that with Exxon. So we have an inverse head and shoulders pattern here, and we're currently trading above both the 20 and 50 period moving average, and that right shoulder is kind of just basing sideways. I also like that the peak of the right shoulder made a slight new high above that left shoulder. So if we can break above that neckline there, then I'm really liking the look of this inverse head and shoulders pattern, and it could potentially take Exxon up to 114 or beyond. So, grabbing $10 in terms of appreciation there would not be too bad at all. Okay, so the sideways trade here is an Alcoa. This trade has been my sideways pick of the bunch for a while now, and it still continues to perform. And then finally, we have a bearish trade setting up here in STM, ST Microelectronics. All right, so this is we had this large bearish breakdown, took us below both moving averages, and now we've traded sideways in this triangular bear rally type pattern. And I like that we're below the trend line right now. This is on a daily chart, mind you, so I would still drop down to a lower time frame to pick out a more precise entry point to get involved with this stock. But this is one that I'm eyeing very closely for some potential downside movement to retest those prior lows around $38. All right, folks, that wraps it up. So just be aware, market conditions are shifting. We've got the Fed, the Fed officials coming out now, and they're saying what the data has been showing us for some time, which is that it's, that the risk of cutting interest rates too early is a very real risk. And so far, it's playing right into our predictions for the year, which is that the Fed is not really going to have the ability to cut rates. That economic weakness on a sustained basis just is nowhere to be seen. And we do need to see some slowdown there for the Fed to be able to start seriously giving us a time frame for some potential cuts. So be patient. Wait for those market conditions to suit your trading plan before you start getting involved with this market. We've got unemployment reports and claims coming out tomorrow, and we have manufacturing and flash services PMI. Earnings reports, we've got Intuit, PKNG, and Melly. So these are all big, big players in terms of telling us what's going on with consumer sentiment in the market, especially with Booking and Mercado Libre. So keep an eye on those earnings reports tomorrow. I'm very interested to hear what their guidance is going to look like. All right, traders, that's it for me. I'll see you next time. Bye for now.